All right, guys, welcome on. I know it's been a couple of days I haven't been on. I apologize. I've been pretty busy. Uh, just a whole load of stuff that I've got to sort out. So I won't even waste any time. Let's go straight into it. I just want to give you guys a few minutes. Now, I know I'm on a bit later, but I just wanted to make sure that I'm on no matter what. And we can actually have a look at what the market is doing. Welcome on. Now, I forgot to mute myself. I haven't 1 second. You're probably going to hear my voice twice, but yeah, mute myself there. Because I know nobody likes to hear their voice twice anyway, at least. But yeah, so I mean, it's been an interesting day of things going on. Currently, I am in gold long, seeing what the market is offering with that. But so far, so good anyway with gold. I'll go through what I'm looking at and then we can have a discussion about our trade. So let me start off with this first. Now, from the recap here, what I probably will do is let me just get another dollar index chart here. Now, I always like to start off with the dollar index because most of the time I do trade major pairs. Now, if I go over here and let's just zoom out to the monthly time frame, all right? Now, the range that I'm working with is from the beginning of when inflation really got started, when we had this yearly induction here. And at the moment, the range of liquidity I'm looking at for demand at the moment or reoptimization for supply is here. Now, if you guys remember, I told you a week ago that until the body of the candle closes beneath this supply flip zone, then we can't say that the dollar index is going to be completely bearish because as you can see right now, the dollar index has taken this low, but has the body of the candle has been pushed all the way back up and we're very close to equilibrium right now. Now, we still have 6 days left until the end of the month, which will put us at till Tuesday, I believe is going to be August the 1st, I think, and Monday is 31st anyway. Tomorrow, we do have a very big day. We have the US interest rate decision to have a look at. Now, this supply order block, if you're wondering why I'm looking at this, is actually a supply flip zone. So I'm just going to put supply, said, right? At the moment right now, even though I know that there is a bearish side to the dollar here, the thing is we do have at this range right here, a very strong area of supply, historical one. And to recap very quickly, we know from 2017, this supply order block was formed, price went short. And then we had another long into the area. We had 2020 where the price wicked above, but we didn't get any body close outside of the range. So the price pushed further short. But the way that we could know, even before this induction here happened, is that we started to get higher lows, even though the price was selling off, which was an indication that we are going to have some bullish pressure coming in. As soon as we had this break of market structure return to the order block and bam, we had a very strong shoot long, which was the first rally. Now, my thing is that in this first rally long, we didn't actually come to any significant order block. The supply order block to the left here is actually at 116, even though I know there's a demand zone here, so you can see the price flipped it. But another thing to look at is that on the monthly here, when we look at the highs of these candles, there's been no interaction between them. So no stop hunt activity or induction activity, whichever you prefer to call it, before the price just kind of pushed short here. So my thing is that this pullback to me seems like a natural structural pullback to continue. Now, I don't believe inflation is done just yet. I think there's still a bit more of a way to go before inflation is done. And I believe that the dollar as a last attempt is going to really print out or remove as much dollars in circulation and boost up that dollar demand as artificially as possible and as quickly as possible. Okay. So that's where my mind is at. So looking at that fundamental perspective, now I don't have a bias, but that's just what is going on right now as we speak. Now, looking at the monthly here, I do still think the price could go long, but it just depends on what happens. If the body of the candle of this month, we get the news and it pushes the price down here and it closes beneath, then we got a continuation for a sell. Now, my thing is, I'll use the daily. Let me see. I'll use the weekly actually here. Now we have a weekly demand zone over here. And this is where my focus is at the moment. My only issue with this so far is that even though I know the dollar index gave us a very strong short and it gave us this reaction here, because it didn't do it inside of this order block beneath this area here, there's unfulfilled efficiency beneath this low, between this range here. So my thing is that I'm actually looking for the dollar to actually be bearish probably one more time. My ideas that I was looking for now, if you've mapped this right, and what I'm going to do is take the top to the bottom here to show you what I'm talking about. If you've mapped this right, then even on the lower time frames like D1, H4, the price should appear with very significant areas around the levels you've marked. And if you see here at equilibrium, we actually have over here an equilibrium order block going on right now. That's the situation we've got going on. So for me, instantly, it's actually put us in a great position where we do have the possibility of the price giving us a great long, if you want to put it this way, like a really good long position or something like that. Of course, yes, I know that we could also have a short go on as well, so don't get it wrong as well. You can equally have that happen, and I'm not surprised if that does happen. So if you see that happen to you and the price does something of that sort, then it doesn't necessarily mean it's a bad thing. It just means that, you know what, the price caught us on the wrong side of the market. But nonetheless, there's still room where the price actually could end up giving us a really good move. Could really end up giving us a really good move that we could work with, you know, and I would like to see, you know, how the price is going to behave with that, you know. So this is ideally what I am looking for, and I want to see what the market is going to do. So, okay, now I've got the markets here at work. So if you look over here, guys, sorry, I'm just trying to get something going. You can see that we have an equilibrium order block right here. So at the equilibrium range on the monthly time frame, there's a H4 supply zone exactly at equilibrium here. So my thing is that I want to see or map out the route of how price can get there. At the moment, okay, from the high of last week, we do have quite a few closes above the high of last week. And we can even see that price, if I just make this a bit better here. If we go over here, we'll see that price is even using this low as a reference point to continue going long. Now, there's one more supply zone to the left here within the blue area that we're looking at right now, which price, if it closes in here, might end up going short. But if the price decides to continue pushing in the same direction, I would like to see what happens when it gets to this equilibrium order block. Now, we know on the upside, as I've told you, that at 103.60, around this area here, 637 at the 103 price to around about 63, let's just call it 700 around here. There's a liquidity gap at the beginning of that day on Thursday that the price has never filled before this massive drop here. So there is going to be a time when the price will get back up here. But my thing is that probably, and maybe this might happen, either we have two scenarios. Either price is going to follow through and basically give us a movement where the price would, let's say, get into this equilibrium order block and then reverse back down. And if it does that to take the low, to get into this demand order block before going long again, that'll be a fantastic situation. And then we proceed for a long. And that will fill the efficiency on the downside of that weekly order block here that the price didn't return to. The other aspect is that price may just decide to go for a short maybe and take this low. But I do think that with the heavy news that we have going on, I don't see why the price would leave that area alone. Now, I'm just going to mark off the previous monthly low as well to use as, now the market algorithm or algorithms will always use this low as a reference point, and also possibly use, which could be the case, this area order block here, which is a key demand order block here as a reference point. If you want to use the lower down one, you can also do that too. So if I use the lower down one, the price is at the edge of it. I think the price is more interested in here because right here, we had unfulfilled efficiency for a long time. This demand order block never really got used. The price got to it and broke straight past without waiting inside. There's not even any wicks here. It's just a straight drop past it. So If it flips to the other side of this can be another reason why the price can go for, you know, a continued short. Another one would be this demand order block 2, which the price broke beneath without any remorse, just kind of broke down short. Now, this one probably is higher probability for it to get into to do this short because it's at equilibrium as well, which adds greater, you know, accuracy to what we're looking at. And also, if I can just take hold of this supply, this area here of supply. You got green here. So if I put this order block here, this order block sits inside of this higher up demand area. So to be fair, as an alternative, it can end up being a pretty fantastic one for us to, you know, make use of and take advantage of for ourselves in that regard. So this is why I'm, you know, so much of a proponent for, you know, looking at that order block here to see what the price does, you know. So we'll have to wait and see what the market has to offer in regards to that area. But I really do think that we are going to get a really, really nice movement either way when the interest news comes out. But it really does depend on the price action that happens between now and before 7 o'clock. So between now and 7 o'clock, depending on where the price is. So for example, if the price is here at 7 o'clock, I'll be suspecting the price goes short. If the price is not here by 7 o'clock or is entered into this area and started to sell off and is not near any kind of like demand order blocks and it's just like, for example, if it was right around here where it's just a liquidity void and it's selling, then I'll just expect the price to kind of continue selling. Now that I've looked at the news, I don't really see any high impact news for tomorrow apart from the US dollar news. We do have in the morning, I guess, in terms of session time, we do have Asian session news from Australia. That might bump the price a little bit. But really, between today and tomorrow is where I want to actually conclude on what the price is trying to do and what we can get from it. So we're going to figure it out. We'll know very soon what the price is trying to do, but we should really take advantage of whatever positions we can get hold of. This is my kind of thing. All right. So I'm really happy to, you know, get into what pairs I'm looking at afterwards. But my first thing would definitely be to kind of figure out, okay, well, where's the dollar going to go to? All right. So coming back here anyway, I'm keeping all of these reference points, as I've said to you, and I'm just throwing these out there in the analysis to see, okay, where would the dollar go to? For me, I just still am suspicious about this movement. I think it's a bit too cliche to just get at the end of this trend and just reverse. I think the price will have to come back down one more time, and that would be a good way to throw people off because the price has already climbed. It has taken a while, but over the last week and a half right now, because we're at Tuesday, the price has climbed back from 99 to 101 again. Okay. But in 1 week, we went from 102 all the way to 99, which was pretty sharp. But I still have hopes that the dollar has one more ounce of strength in it left, that last fighting strength to push for extreme long before it starts to crash down again. So having that in mind, what I would say to people is keep in essence, keep all of this stuff and this analysis and screenshots, right? And be prepared to see what happens. For now, because the price is kind of in the middle of nowhere in a sense, it's not 5 o'clock yet. So we couldn't look at the H4 and say, okay, well, we're going to go for bullishness or bearishness. We couldn't really do anything, but we can map out these future events to happen. Because the news is such a central part, it's the most important news in the financial markets. Literally, it actually is the most important piece of news. You know, between now and tomorrow, the price could end up really anywhere. So it'll be good for us to look on the day again. Obviously, before the news, I'll be live again. I'll be on at 2:30 as normal, guys, from tomorrow. And then we can actually observe, okay, we have a few different options here. Let's see, you know, what the market is offering, you know, from that. So I'm looking around. Right now, I want to see what the basis of the trades are going to look like, or what's the basis of my direction going to look like tomorrow. Because at the moment, I'm bearish on the dollar just one more time because of this inefficiency. And to my mind, the only thing that could push the price down this short and then push it long again would be something like interest rate news, if that was the way that the price would want to take. Okay. Now, based on that, now for me, I'll tell you the gold trade. So the gold trade I'm in at the moment is a really lovely trade. I marked it out perfectly and I actually went through it all with you. So I'm going to quickly just break it down. Now, I do have it on my IC Markets account because I didn't take the trade on there. So I can actually lay out the markings for you. Let's go to the D1. I believe that's where I have my markings. Yeah. So yeah, let me share my screen. Let me go over to this side. And let's take a look at the markings here and see what we've got going on. All right, so on this chart here, let's take a look at what we had. So gold, first of all, before this happened, and the before and after, I put it on Instagram on the WGA Insta and also on my Insta as well, so you can check it out. Right. We had a situation where the market has, if we follow the flow of efficiency from the beginning, now this wick right here on this account, I'm sure we had that discussion before. For most brokers, when the price opened at 10 o'clock that day, 2 months ago, it took all the highs, and I can push this a little bit higher to make sure I cover all of those. Let's put that here. There you go. So all the highs of 2020, any previous high that gold has ever had in its history was taken by this one move. Now, the reason why I know this move was manipulation, as I said to you, is very clear how it's because of the timing of it. And if I just scroll back here on the charts to show you where this occurred, you'll be able to figure out why I'm saying what I'm saying. So here we go. So right here, this is the day that we had. This was the 3rd of May. Price was doing what it was doing. On the 4th of May, the market gapped up. Oh, sorry, is this May? Yeah, the 4th of May, the price gapped up by 3,619 points or 362 pips, let's call it that, without any warning. There was no anything. And to be honest, to have this happen at the beginning of a day is very, very random. Well, it's not random because it was orchestrated, but it's not really possible if you think about it for the first minute to have this much buying pressure on gold from the previous day. So this was definitely market manipulation, and the market went to a very specific range. Now, you know, usually when I was taught trading in the early days, I thought wicks were just random figments of, you know, like too much buying or selling, or just prices that people are trying to reach and things that I was taught, just a bunch of stuff that are not correct, right? So if you look at and you zoom out in the perspective of the weekly, at least you'll see that the end of this movement, this magical movement or supposed movement that is not manipulation, but we know it is, the height of it was exactly just above the high of 2022 and the high of 2020. So both of these highs were taken. Now, why would the price take these highs? Well, above these highs would definitely be a huge amount, probably the most amount of buy limits and buy orders in the market, because we know that there's inflation that's going to persist. We know the dollar is dying, even though I know the dollar will have one more long in it. But even then still, the bullishness of the dollar is, you know, still crystallized for one more move. Now, in the future, though, when we know that the dollar will start to die, and when inflation gets high, people rush towards gold as a hedge, right? So Russia, China, or during the Ukraine war that's going on, Russia has, you know, stocked up on gold, and China has been stockpiling on gold, you know, for God knows how long. Okay. Now, with that being said, if we look at what we have here, you know, looking at the high right here, any buy stops or any buy orders that were resting above here, or even stop losses for a sell, would have been triggered by this wick. Okay. And then the price would have reversed the other way. So there was a lot of money activated here. Now, on the other side of the story, clever institutions, knowing that there's buy limits and buy stops above here, the reason why the price was able to be triggered for at 11 o'clock move or market open move on gold like this, and when I say 11 o'clock, it's UK time when gold opens for us in the UK here. Anyway, all of the people who were buying, or institutions or smart institutions who were buying, would have offloaded their buy positions to the people who have buy stops or above here. Because if they need to get out of their positions, they need to sell their position to you, in a sense, at whatever price they want to get out at, which they managed to do. Now, if we follow the order flow from the moment this thing happened, we can see that we have efficient price action. So this wick did produce a supply zone. We had an initial short, price pulled back into this area. We had another short. The price wicked into here during CPI news. I remember it because I missed it. Then we had another short here. Then the price has gone into this supply zone. So that's efficient price action. Then we've seen the price sell off again. Now from this sell off here, we've formed an order block that the price kept on selling off until it got to this demand order block. When it got here, we had a huge push up first, the first leg up. I'm going to take off this line here because we don't need it. We had a huge leg up in price action. Then we've had the body close around this region, which means that the price has flipped this zone for demand. We get the confirmation of this because we get an induction over here on the D1. Price does this movement and pushes long. Now, the exact position of the long here that the price does is towards the high of the previous month over here. Now, the thing is, even though I know the price would like to reach here and fill out this efficiency before the massive drop, in order for it to do that, it would need as much demand liquidity as possible. So the trade setup that I had, which I did speak to you guys about, is that once this monthly high is taken, I'm expecting the price to actually rally back into this order block and then take off for a long, which is why I have this exact trade. My students have this exact trade, and maybe some of you should have this exact trade. And so this is why I'm in the long right now. If you zoom in a bit more, you can see gold has even given us a courtesy by doing another one of those beautiful inductions inside of this area. And I'm expecting gold to take off like a rocket moving forward. Okay. So for me, gold has become a fantastic opportunity, of course, for a long. And all we need the price to do now is to leave us with enough room so that we can actually ride this wave all the way. Okay. And that's really just the reality of the story. So even though it's been a pretty interesting day, okay, I know that, you know, the price wants to kind of rally and take off, and that's really what I'm expecting the price to do. And this is why I'm holding on to my gold position. And that's really it when it comes to gold, really. Right now, gold is starting to rally near the end of the day, which is pretty good. But you can see here that there's a lot of interest in gold because we had one move here in Asia where the price took the low the previous day. Then we've had a second one today where the price came up a bit here. And then we've had a third one to take all these highs, and now it's starting to push along. So that kind of three-time or three-tap move, whenever I see gold doing that, I know that there's a high interest in trying to stop people out before taking off, you know? So this is why the move is so raw, so strong. And, you know, I'm happy with what gold is doing right now. And I expect gold to continue to give us some really nice bullish action. Okay, so right now, once gold, for me, I haven't dragged my stops to even because gold hasn't broken the threshold I want. Because gold is such a very fast moving pair, I'm reluctant against allowing gold to just kind of fly everywhere, because I know that with gold, the risk here is that gold could actually spike down by 100 pips again, which is done twice already. So for me to drag my stop loss to even right now with the kind of range that gold operates in, I would like to see it close above the day, the high of the previous day with a body close, you know, or even 2 days. That will give me more confidence to say that, you know what, I'm ready to kind of put my stop loss to even. So this is really the plan I've got set out for gold. This is what I'm working with right now, you know, to see what gold has to offer. And hopefully, yeah, we should be on our way for some pretty nice price action, you know, down the road. And that's really kind of my view. So if you're not into gold or you're not a gold trader, that's no problem. You can just observe, you know, the price action of what's going on and kind of make a decision for yourself if you want to get in or not, you know, and, you know, from that, you should be able to, you know, make some good decisions about what you want to do. Right? I don't want to put it past you not to take gold, because I think it's a great opportunity, you know, except I think it is a great opportunity to take gold. But of course, you just want to make sure that you set yourself up in a position where you can actually take gold and feel comfortable. So if you don't feel comfortable with taking gold, that's no problem at all. Just you know, make a decision before you go and then just ride with it if you feel like it's the one to ride with, you know what I mean? So for me, if you want to see the trades that I've got Yeah, yeah. Yeah, so let's see what happens, moving forward from now, and let's just allow gold to do what it needs to do. Let me just go back here. I know that it is going to take off near the end of the day. I'm hoping the Asian news will give it a nice little boost as well. So what we're going to do, let's see what we get going on. But what I think we should do is, let me get this up. All right, here we go. I've got it. So what I want to do is I want to go through the news with you guys really quickly and just take a look at what we've got going on here. All right. So if we take a look at the news that we've got going on over here, let me just get this up. All right. So with the news, there's nothing else really to go on for the day. I really highly doubt there'll be something that will cause the price to do anything major. Tomorrow, for us, I guess, yeah, tomorrow in a sense, maybe for you guys in the US, it might be tonight, I'm guessing, or 11 o'clock. But for us in the UK, around about 2:30 in the morning on Wednesday, the Australian dollar news will come out. And I'm sure, as I said, the Australian dollar is tied to gold pretty strongly in terms of currency correlation, just because of the mining sector of Australia, which is heavily weighted on gold. So if these results are positive, it might cause gold to go long as well through the night. I'm not looking for any more entries. And ideally, I would say this, that my target for this trade is actually 2007 or between 2007 to the 2012 range, as I have marked there to that supply order block. The interest rate is expected to increase. If that does happen and there's an adverse reaction, because what I will do definitely is make sure my stop loss is at least at break even, probably even into profit if I'm very far away from the entry, or if price is far away from the entry, just only because I want to make sure, sometimes with high impact news, even when your stops are at break even, you could still take a loss, because when the volatility is high and the liquidity doesn't match, even if you have a stop loss somewhere, if there's no liquidity to pull you out of that position at that price, you couldn't come out, right? So this is another important thing to remember. So for those of you who've had that experience of, like you want to come out of a position, but you can't or something, that's the reason why, okay? Just to kind of give you a heads up on that. So if that's ever happened to you, don't worry, I've been there myself. It's a very annoying thing, but that's the reason, that's the exact reason for it. It's because, there wasn't liquidity to come out of your position. Okay. So just bear that in mind when you're looking at what the market is doing here. Okay. Now it looks like gold is heating up as it's come to 4 o'clock. I can see my trade is really doing well. But this is what I would say to you guys for tomorrow. If you want to see the trade I'm talking about, I started a new challenge or new set of challenge accounts here. So these are the trades that I've got going on. I've got these trade entries here. If you wanted to see my trade entries, these are the entries I have. Stop losses are still in place. I've got I've got 2 of these accounts, demo ones. So, and I've put 0.60 lots on both. And so they should give a good profit target. I believe the risk set for this area here should be this order block. So it's fine. I've got a target for about roughly around about I think it was 2 of these, so about $3,200 of profit would be the mark on all the accounts really, and that's what I'm looking for. I also have Euro JPY for a long. Now I made a bit of a mistake with this one because I was prepared for the setup to take the long, but the way I did my stop loss wasn't right, so I kind of messed things up there on that front. But yeah, that was just a mistake that I made. I don't know what I was doing. I put the stop loss in the wrong place, so I got stopped out, but happens anyway. But yeah, Euro JPY, the reason why I'm looking for a long is just because looking at the price dropped into this area. We had another kind of move, break of structure here, return to the order block. So I'm just looking for that long position to come out of that and push a little bit further long. But we'll see. If Euro JPY doesn't work, I'm not offended at all, but it's just kind of worth the try to get in. And that's really about it, folks. So these are the trades I have on this account, and I put them on all my accounts. And let's see what profit we get. At the moment, it seems that Euro, JPY, and gold are moving in the same direction, which is nice because they had a bit of an anti-correlation going on before, but now it seems to be working out pretty well. All right. So I'll catch you guys later on. I'm pretty happy with my trades, and yeah, I'll catch you guys on the